Let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA analyze the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. And we are not going to get in at the exact bottom. And we are not going to get out at the exact top. But we will make money in the middle. Okay, this is our end of day market analysis for the Major Market Index ETFs for July the 6th, Wednesday, July the 6th, 2022. Wednesday, July the 6th, 2022. And we're going to start out with the DIA as usual. We're going to start out with the DIA. And this is a daily chart of the DIA that we're looking at now. And look, at the end of the day, the 5 and the 9-day moving average, the white moving average line and the green moving average line, the 5 and the 9 are exactly together. As you can see that right here. It's so they on top of each other to the point that we can't tell the difference between the two. All right, let me zoom in. Let me zoom in so you can see that very clearly. You see that? It's just a white line, as a matter of fact. Here's the 9-day moving average, the green line. Here's the 5-day. Look at the two of them together right here. All you see is a white line. The 9-day moving average is directly inside of the 5-day moving average. They're together. And here's the downward trending 21-day moving average, the yellow line. Now notice, price has traded directly up to the 21-day moving average today and stalled and pulled back and closed a little bit above the 5 and the 9. Today, prices closed at 310.41. The 21-day moving average is at 312.40. We're going to wait and see what happens around this 21-day moving average. Is the market going to stall here and get rejected? Or is it going to break through and start coming up and testing this downward trending 50-day moving average, that red line, the downward trending 50-day moving average at, right now it's at 320.35. So look, I'm going to tell you straight up, this rally is suspect to me. It's suspect. We got to get above this 21-day moving average, and you're going to run right into this downward trending 50-day. I'm not going long in any way, form, or fashion until I see what happened around this 21-day moving average for sure. I need to see what's going to happen around this 21-day moving average, how the volume and the momentum, acceleration, everything is going to look when it gets above this 21-day moving average convincingly. And then we're going to have this 50-day downward trending 50-day moving average right overhead. You see what happened last time the market ran into this downward trending 50-day moving average, right? We stalled, consolidated sideways, and broke down. I'm not saying that's going to happen again, but I am saying that the downward trending 50-day moving average is a very strong overhead resistance. Look, today we had an up day. We stalled directly almost to the penny of the 21-day moving average on low volume. To the penny on low volume. Low volume. Do you see how much above average volume do you see right here? Okay? How much above average volume do you see right here? Low volume. Low volume. Okay? Do you see a lot of accumulation? No. Do you see distribution? Yes. Okay. Volume analysis, volume bar analysis, you got to do it. All right, so here, now, this is our daily chart of the DIA, our structural chart with our trend lines, horizontal, support and resistance levels, and our trend lines. Well, you can see we traded up to 312.53 for the DIA today. 312.53, this horizontal resistance level, almost to the penny, and it pulled back. We still got this overhead downward trending trend line that we got to contend with if we get above this 312.53. Look, we did bounce off of these prior support levels down here at 305.12, 305.26, I'm sorry, and 306.28. We got above that. This is the area area of interest I was talking about for support. We got above that. We got above this internal trend line. I give it to it. We rallied right up to this overhead resistance area at 312.53, and we pull back. And we pull back at the 21-day moving average. Look, let's see what happened. Let's see what happened. That's what I'm looking at right now. So let's see what happened. Let's take a look at the SPY. Okay, let's take a look at the SPY. And let's go to our moving averages first. You see it? See the SPY? Almost to the penny. It traded up to the 21-day moving average and the 21-day moving average, and it got rejected. You see it? Well, it didn't get rejected yet. It stalled. Let's say that. It didn't get rejected yet, but it stalled at the downward trending 21-day moving average right here. It was an update today on low volume. Rebound rallies on low volume. New highs on low volume. All forms of weakness. All forms of weakness. Rebound rally on low volume. We had a follow through day. We had a new rally attempt. We had a follow through day. We already did the follow through day analysis. We know this follow through day got a 90% chance of failing at this point. But a rally attempt, a rally on low volume. Look at the volume since the follow through day. How much above average volume do you see? One over here. Where else do you see it? You don't. Do you see accumulation? Not really. Do you see a lot more distribution? Of course you do. Distribution, 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 distribution. You see what I'm saying? Only got accumulation here, accumulation here, accumulation here. See how much distribution you got compared to accumulation? Do your volume bar analysis, y'all. We stalling at the 21-day moving average. We rallying on low volume. A lot of distribution coming in. Even since the follow through day. It's a lot of distribution since the follow through day. That's not good. That's not good at all. Seeing distribution coming in after the follow through day. Okay. We stall at the 21-day moving average for the Standard & Poor's, the SPY, the ETF that tracks the Standard & Poor's 500. Now, we're looking at our structural chart with our horizontal support and resistance level in our trend line. Well, look at it. You see it? Okay, granted, we bounced off the 380. We traded below 380 just a little bit today. We traded below it just a little bit, and it bounced. It ran up, but look where it stalled at, right at these overhead internal downward trending trend lines. It closed right below this downward trending trend line, and it stalled at the 21-day moving average. Listen, y'all, are we going to get above this? Are we going, or are we going to get rejection and come back down, break back below the 380, and start coming down here, testing this internal trend line here and this horizontal support level at 371.63. The question is this: can we get above the 21-day moving average is holding as resistance right now? And can we get above these downward trending trend lines and this overhead resistance right here at 384.94? That's the first area of interest. And then we can see what we're going to do as far as moving upward. But we have to first get above 384.94 on the SPY and these downward trending trend lines. You see that 21-day moving average, y'all? You see that 21-day moving average? You see it? You see how we stalled right at that 21-day moving average on the SPY? Be careful. It has to prove itself. It has to prove itself. It has to. All right, here's the Qs. Let's start with the moving averages on the Qs. Look at the moving averages on the Qs. We just closed. We opened up. We traded down to the 5 and the 9. That's all good. We rallied up off of the 5 and the 9, and we closed right above this downward trending 21-day moving average. So we made it. We got above this downward trending 21-day moving average, and we closed above it. That's great. We got this overhead downward trending 50-day moving average that's right overhead. Right overhead. Every time we get close to the 50-day, we collapse. You see it. Okay, the 50-day moving average is a lot of overhead resistance. We collapse. come up, collapse. Okay, be careful. Today, we rallied up on lower volume than yesterday and well below average volume. Okay, so it was no accumulation today. Prices are going up on low volume. Volume is coming in low. Okay, but we got above the 21-day moving average on the Qs. So I got to hand it that much. Let's look at the structural chart. Okay, let's look at the structural chart for the Qs. In 1 second, let me bring it up. Okay. Let's look at the structural chart for the Qs. In 1 second, let me bring it up so you can see it. Okay. Look what happened on the Qs. Look at it. We traded right to this internal trend line right here. We traded right to this internal trend line right here. And we stalled. So we trapped it between 288, this horizontal overhead resistance level, which now should act as support, hopefully, 288.07, and this downward trending trend line. Look how prices stopped directly in between the two. In between 288.07 and this downward trending trend line. Listen, y'all, I ain't making this stuff up. The algorithms see this stuff just like we do. We drawing the same trend lines the algorithm drawing. Listen, this stuff happens almost to the penny. Y'all see it. Okay? Here's the downward trending trend line. We got two internal trend lines right here. You see those two internal trend lines? We traded right up to it and pulled back. We closed right inside of those internal trend lines in this horizontal support area right here at 288.07 for the Qs. Let's see what happened tomorrow. Are we going to get above these internal trend lines and close above them? Or are we going to break down and close back below 288.07? And then start coming down here testing 284. And then, who knows? Might come right back to 280 and start breaking down. I don't know. But what I will say is that I'm going to be patient and wait and see. This rally got to prove itself to me. It's a 90% chance that this rally is going to fail. We're stalling at the 21-day for the DIA and the SPY. We got above the 21 days on the Qs, but you see where we're stalling at these trend lines. We got these downward trending 50-day moving averages all over the place. It has to prove itself. It has to prove itself. You see that downward trending red line right here, the 50-day moving average. We're not looking for the bottom. We're middle traders. Yeah, things are looking better. The MACD gave us a bullish crossover. The stochastic is pushing up. The KST has gave us a bullish crossover. But look at the RSI, still below 50. It's on the wrong side of the 50-yard line. Look at the check-in money flow. It's negative. It's negative. I give it to them. The directional movement index, the ADX, the red line is coming down. The sellers are starting to lose control, and the green line is moving up. The buyers are starting to gain control. But look at the buyers are trying to gain control, not starting to gain control. I'm sorry, trying to move up to gain control. But look at the trend. Look at the ADX line, the yellow line. It's below 20. It's at 17. There is no trend. There is no trend. Okay? We're starting to move sideways. The ADX line is telling you that it's coming down. And it's below 20. So let's be careful, y'all. Let's be careful. Let's look at the IWM. You see what happened with the IWM today? Traded right up to the 21-day moving average and fell apart. Traded right up to the 21-day moving average and fell apart. Everything is stalling at the 21-day except for the Qs. You see it? Right here, the yellow 21-day moving average. We closed just below the 5 and the 9. That's combined together right here. Okay, we got the downward trend 21-day moving average, and we closed and we touched it. The high of today's action is directly almost to the penny of the 21-day moving average, and we stalled. And we pulled back and we closed back below the 5 and the 9 on the IWM. The volume was lower than yesterday, but it was a down day, so there was no distribution. Okay, no distribution because the volume was lower than yesterday. In order to get distribution, we need a down day with higher volume than the previous day. In order to get accumulation, you need an up day with higher volume than the previous day. We don't have distribution today. Let's look at what we stalled right at the 21-day moving average. Let's look at our structural chart. Look, y'all. You see that big, thick red line? Do you see that big, thick red line? March 2020 highs. Well, we played around it, and we got back above it for the last 3 days. That's great. But we rallied up to the 21-day moving average, and not only the 21-day moving average did we rally up to, but we rallied up to these downward trending internal trend lines, almost to the penny, and it got rejected. It got rejected, and it pulled back. Let's not say rejected as of yet, because we didn't turn around and start breaking down, but we did stall. Are you picking up what I'm dropping down? Are you picking up the jewels that I'm dropping? Okay, let's take a look at the ITOT. The ITOT traded up to 85.25, this horizontal overhead support level right here, 85.25, and it stalled. You see it. It stalled. This downward trending internal trend line right here, we traded up to it, didn't touch it, didn't get to the penny, but we did run up to it and pull back, and now we close almost unchanged today on the ITOT. We close up 0.1%, 0.14 cent. 0.14, 0.1%, almost unchanged. Okay, but 85.25, holding that resistance. We did bounce and got back above this 84.59 level, which is our level we've been watching, the 84.59 level as support. Well, this previous fractal right here from the double bottom. Remember the double bottom? When we broke out, went into consolidation and it fell apart. Remember the double bottom? Well, 84.59 is the second low of the double bottom right here, 84.59, this horizontal support level. 85.25 is the first low of the double bottom. We got above the 84.59, but we stalled at the 85.25 in this downward trend internal trend line. Okay, but now let's look at the key moving averages on the daily charts. Remember, this is all daily chart analysis, right? This is all daily chart now. We look at the daily charts. Just in case I didn't say that, I apologize. Daily charts right now. All these charts we've been looking at is a daily chart. These are daily charts of ITOT. Look where we stopped at. I don't have to say it. We stalled directly almost to the penny of the 21-day moving average. You see it. The 21-day moving average held it almost to the penny. Look, y'all. We're stalling at the 21-day moving average. Now, granted, I will admit that the ITOT closed up today. It stalled at the 21-day, but we had some really high volume today on the ITOT. Well above average volume and higher than yesterday, the previous day, and well above average. I think I looked at it was over 100% above average volume today. So I had to give it to the ITOT. It has some volume. But we stalled at the 21-day moving average. We did close above the 5 and 9, but we stalled at the 21-day moving average. But it was some volume coming in. Hey, we got to keep an eye on the FANGs. I'm going to do some videos on the FANG MTs. Do you remember those guys? I told you I don't see how this market going to rally if the FANG MTs don't. Well, the FANG MTs are trying to firm up. There's no doubt about that. Okay, they're trying to bottom, it seems like. They firming up. They're not collapsing like they was before, even on bad news. If that continues, this thing could move sideways or go up. I'm not sure, but we have to keep an eye on it. Look at Apple. It's stalled at these internal trend lines, but it's trying to move. Okay, it's trying to come off a bottom. It's actually trying to make higher highs now. Okay, so let's see what happened. We had a low, a higher low, a high, and let's see if we're gonna make a higher high and keep going. But that's the beginning of an uptrend. But we have to see. But right now, it's stalling at these internal trend lines. We're going to do some videos on the FANG MTs. We got to start watching them, okay? But we're gonna look at that. We're going to do some videos on the FANG MTs, okay? But we have to start watching them, y'all. We have to start watching them. Now, let's finish this up. Let's finish this up real quick, okay? let's finish this up real quick by going to the major indexes themselves. It's something that's very interesting with the major indexes themselves. And let's just go straight to the moving average charts, right? You see that 21-day moving average for the Dow Jones Industrial Average. This is a daily chart for the actual index itself. You see how we stall right at that yellow line, the 21-day moving average? You see that? The index stall at the 21-day moving average also, right? You see that? Okay, let's go and let's look at the Dow Jones. The Standard & Poor's 500, the actual index itself. You see it stall and pull back and close right below the 21-day moving average. Okay? You see that? For the Standard & Poor's 500, this yellow line, it closed right at the 21-day moving average. Look at the NASDAQ, the yellow line right here, the 21-day moving average. We closed almost right on it. Look at the IWM, the 21-day moving average, the yellow line. Traded up to it to the penny and got rejected. The 21-day moving average, y'all, be careful. Be careful. I will admit the Standard & Poor's 500, it held the 3,800 level. I told y'all the 3,800 level is a serious support. 3,800 right here. Okay? This red line. This is the daily chart of the Standard & Poor's 500, our structural chart, the actual index itself. Look at this red line at 3810. We traded down to it today almost to the penny. Almost to the penny and bounce. The 3,800 level is key. If I am to short the Standard & Poor's 500, I would definitely going to have to wait until it breaks back below the 3,800 level and see how it looks from there. But there's no way I will ever try to short this thing if it's still above this 3,800 level. That's a very strong level. And don't forget the old man, Art Cashin. Don't forget about Art Cashin, the old man. I told you about him over the weekend update. He said his support level is 37.30. Don't ask me where he got it from. Don't ask me where he got it from. I told y'all that over the weekend. I don't know where he got it from. Okay? But that's his level. I'm showing you the 3,800 level. Okay? Now, he said 37.30. I do have a yellow line here on our fib chart that's at 37.23. That's another level that I'm looking at. 3,800 and then 37.23. I don't know where he got 37.30 from, but I know where I got 37.23 from. Okay, you see this yellow horizontal support level on the fib chart? You see that? We break that. Oh, yeah, I had to take a nibble to the short side. I would definitely have to take a nibble to the short side, and the next area of interest will be right here. We break below that, I'm looking for the 50% retracement. Well, let's see what happened. But for right now, we're stalling at the 21-day moving average. You see that. Be careful. We're stalling at the 21-day moving average. Here's the Standard & Poor's 500. You see the 3,800 level? You see the internal trend lines. You see it. Here's the Dow Jones, the actual index itself. You see how it's caught in between these trend lines here? You see how it's caught in between these internal trend lines right here? It got to prove itself, y'all. You see that? See these internal trend lines? See where price is caught at? Overhead resistance right here at 31,255. We got support levels down here at 30,635 and 30,504. You see it? It has to prove itself, y'all. It got to break out of this. It got to come out of this right here. It has to come out of this before we do anything. That's how we're looking at it. This is not financial advice. Y'all know that. But wouldn't it be wonderful if it was? Wouldn't it be great if it was? But it's not. But what if it was? You would definitely not lose a lot of money. See you in the next video.